the next 2 days, Wednesday and Thursday. Jitendra, Sriram is with us, Senior Fund Manager at Baroda BNP Paribas Mutual Fund. Jitendra, good to have you with us here. Thank you for your time. You know, the screen is negative, so the price makes you negative even if you want to be a little constructive or positive, but you must look through it. If you have time on your side and if you have money to invest, what are you doing, Jitendra? And how are things looking? Is it looking so negative, or what's the view here from here?
Yeah, so broadly, I would say I think the correction has been quite intense and quite rapid as such. So I would think that at this juncture, it actually looks like it is a little bit overdone for near term, because at least from what we can see on the Capex front, the reports that we are picking up, at least the Capex on the ground from the governmental sources and all, seems to be picking up. So our take is that at least the earnings momentum should improve from here on. So the kind of, we were undershooting on the earnings estimates all through first quarter, second quarter. My take is that we'll probably be closer to expectations, at least on the large cap odd side. Maybe the small cap still has about a quarter or so to go before it starts recovering. But I would think that at least certain segments are starting to look far more attractive now.
So which would be the sectors where we will see earnings growth revert, where there is opportunity sectorally? And where are the small cap pockets where you think that the recovery is a little more delayed now, 1 to 2 quarters out?
So I would say that broadly, if I look at it, at least the exporting segments is something that we are clearly seeing some kind of better traction come in, because, a lot of their pains were early on. So whether it's healthcare, whether it's IT, all these segments are starting to look a little bit more promising. There is a margin uptick that is expected by the street going forward. So those are areas that are clearly positive. The second is also that the Madam FM has put in a lot of money into the hands of the middle class now post the budget. That impact will be starting to felt through from April onwards. So hopefully that should also lead to some amount of discretionary pickup going forward. And that will again be an area where you could see some improvement and uptake coming through on the consumer discretionary side. So those are areas that are clearly looking positive. I would say that, where it could still take a little bit of time is especially those exposed to some of the Capex thing, because Capex, what is happening is a lot of the announcements are happening right now, but it might take some time before these investments are crystallized, move on the ground, that secondary order giving out happens. I think that might be a little further out there.
Okay. Jitendra, hi, good afternoon. Slightly different question, because I've been sort of trying to figure out how mutual funds are looking at this big fall and, what's the sense. The monthly data is going to come out only tomorrow, but I think the sense that I got from a couple of people is that it's not like suddenly the investors are shutting off the tap and flows are drying up. But what have you been hearing at your AMC and around in peers in terms of redemption pressures, especially for mid-cap and small-cap funds?
So it's very similar to what the news coming to you, in a sense that there is no panic as such on the retail side. See, retail is also confronted with a couple of things. On the tailwind, of course, you have this big rising equity cult which is there. The second is more money in the hands of consumers. All these are pro the equity theme overall. Of course, the headwind is that, in some of, especially like SIPs into, say, the small cap segment or something, you are seeing now the 1 year return being, say, probably about negative or something like that. So you could have a little bit of a headwind there. My take is that, the retail has also evolved over a period of time. They don't panic as much as they used to in the past. So I would assume that they would probably ride through it. And we are not seeing any, any kind of material, people pulling out money or something like that. What we are seeing is that, okay, the positive trickle that used to come in, that has probably, marginally come off, but it is still a positive.
Okay, all right, Jitendra, I request you to stay with us. We're going to come back to you. We want to
the market that we are in the midst of. Back to that conversation with Jitendra Sriram, Senior Fund Manager at Baroda Mutual Fund. Thanks, Jitendra, for just waiting by. Want to talk to you about now the sectors that you're still convinced on, or the pockets where you think, despite this volatility, I mean, say 2, 3, 4 months down the line, 5 months down the line, at least one is reasonably sure of returns because of the growth profile and the valuation comfort. Where do you find these safety zones in the market?
Sure. I think utilities, as I mentioned, exporters was the first one, the healthcare, IT sectors. The second, I would say, is utilities is looking fairly promising. You know, you had in the morning, you were putting out this thing about the kind of capacity growth, the kind of energy demand that's coming in the country as well. So those are something which are long-term drivers. So I know I can see that, you know, there has been a little bit of a pressure of it, but I think the longer-term story is pretty much intact in these names as well. And also the cost of borrowing is a big help because utilities typically work like an inverse bond as well. So to that extent, I would say that that space is something interesting. And lastly, I would say even pockets of consumer discretionary should be promising. You know, you have this huge amount of capital reaching out into the middle class. Where does it actually show up? Is a little bit questionable. I mean, in a sense that whether it is used to buy a two-wheeler or a four-wheeler or something like that. But the fact is you have higher disposable incomes, which should be positive. I think sometime in the next year, we should also be starting to hear the news flow around wage commission awards for government employees, and then it follows through for PSU employees and all that. So I think you have a 2-year kind of a run of income boosters coming in for the salaried class as well. So that should also do fairly well.
Got that. Jitendra, we'll leave it there. Thank you very much for joining us. It's a pleasure having you here on CNBC TV 18.